Hi guys, quick update here for YouTube for the YouTube side of things here. If you want to join the group, you know what to do, and there's various courses online here. Had some nice move in the altcoins here the last couple of weeks, and obviously on Coinbase too. So advantage of being in the group, you get access to all the information early rather than late. So Bitcoin itself, obviously we are still in a macro downtrend. I think it's going to take a whole host of effort to get all the way back up here. I don't see that happening, but clearly there is something going on in the altcoins. They are very, very cheap. They are 90% down in some circumstances from their lows. This could still be part of a 1-2 little pre-CPI report. I still don't think Bitcoin offers anything, but when Bitcoin is going up / sideways and Bitcoin dominance is falling, obviously you want to be holding altcoins. So, at times there's no need to be too bearish Bitcoin. It's irrelevant. All you require from Bitcoin here is just to go sideways indefinitely, while my main man, Singularity over here goes to $9. So, Marlon Brando's having a real hard time here, the poor guy. So, you got to be careful here being too macro bearish, because last year was very difficult because nothing was properly bullish and nothing was properly bearish. Yeah, XOM still doubled. Alibaba, we caught that low. And now Coinbase too, and obviously Facebook, I thought it was going to go to 84, started bouncing at 87. So you got to be very careful here, looking too much at the index. So because yes, the index still has a very bearish count. I'm not off the 1, 2, 3, 4, 5 opinion. I'm off the more that's an A, that's a B, running flat C. And still, there's no point holding this index fund. It's a waste of time. Mutual funds have not performed very well. It's a value, it's a stock pickers market. It's a stock allocation market. Those who are good at picking stocks and finding value and finding opportunities, those are the ones making money. So you don't necessarily have to day trade here to generate yield from this market. This index is not worth, I don't think, buying until it at least takes out the pre-pandemic high. Then we get a bit of a washout. And we've spoken about how the S&P usually washes people out. It's a bit of this, then you get the V-bottom capitulation, then we go. So I am expecting another down year here. I know Tom Lee recently said, 20% upside from here. I don't see that happening unless, of course, we go much, much lower first. Then there's the opportunity, and you lose money on the entry, not on the exit. So this, even if the S&P somehow manages to get back to this level before the end of the year, at some point this year, likely there's going to be a big capitulation event. But you've got to be very careful looking too much in the index. Otherwise, you're going to end up missing the move. Like, this could be a lifetime low on Coinbase. People might not ever live long enough here, likely, to ever see a new low on Coinbase, right? The key level here is here. Why is that a key level? Because that's when the accumulation started. Technically, that's a 9-month accumulation. And those who have taken the masterclass know effect is proportional to cause. So as long as this 40.83 level holds, there might be a bit of prattling around here the next couple of days just to shake some more retail traders out. Everything below this level is effectively the spring, the Wyckoff spring, or the shakeout. And sometimes, you have to wait it out, right? That took weeks down there. But that's a lot of accumulation there. To me, if it holds 40.83, this is going to 67 by Q1 end, followed by which point it'll go to the other side of range, which is at the 100. So, got to be very careful here, getting too bearish. I think focusing too much on Bitcoin or the Nasdaq or the S&P is going to shake a lot of people out. Like, I'm looking at Singularity here. I mean, this could go to $9 here. Best case scenario, I think it's very undervalued here. 9 might be a push, but it's at least a 10x from these levels, if not more, a 50, 60x, depending on how you want to look at it. So there's definitely opportunity here. So if you want to join the group and get in on these altcoins, let us know. You can just join. If you want to pay via crypto, just message me through the Facebook page. Recently we've started to share videos on the Teachables website too, so the quality is at 180p or just like it is on YouTube, really, because Facebook have started to compress some of the videos down to 720p. So we've started to use Teachables as of this week. So for those who want to join, you can just go through. There's probably a discount code somewhere. We caught this low in the group. That was a very obvious end of year tax loss selling there. So got to be very careful being too focused on Bitcoin. I think that was a mistake a lot of people made last year, focusing too much on the index. Anyway, that's Coinbase. That's Salgado. Obviously, we don't want to give away too much there from the one sector that's actually moving. So Coinbase. What else can we cover here? And I think there's great opportunity in some of these coins if you know where you're looking. So let's just quickly cover Bitcoin one more time. So those are all the coins that we go through, by the way. So yeah, longer term, I'm still macro bearish. I don't think this is offering anything. However, for those who are looking at purchasing altcoins, this is all you require, is just a bit of a sideways / up. And if this ends up materializing into something, I mean, I suppose you can read that as a 1, 2, 3, 4, 5. Then that's all the better. So if we assume that's a 1, 2, 3, 4, 5 into there, there's your 61.8, and now we're rallying. So to me, the key level has to be this level here. So that would be a key level, I think. I think if we break above 18,000, then we can easily see these highs here. So once again, this market is irrelevant. It offers nothing in terms of yield. There's no opportunity for spot holding here without leverage to make any decent return. It's all about the altcoins. You have to be focused on the altcoins. We've gone over this before many times. When Bitcoin's going sideways, this is going down. That's your time to buy altcoins. Now let's talk about something interesting which I've been contemplating here the last 6 months. Is basically a flip, and I think it's going to happen. I think there's a very real possibility of Ethereum becoming number one for at least a short period of time, and that is because of the outperformance of Ethereum relative to BTC. So you can divide their market caps into each other, and basically when this approaches 1, we're going to get a flip, and I think a flip is nailed on, to be honest. It might even happen this year. So Bitcoin, once again, it just offers nothing at 16 grand. I think there's we got very close to a flip back in Jan 18. We got to 1.39. But I think all of this is some kind of WXY ABC large expanded flat. So at some point this year, I'm expecting this to hit 1. And I think that is the headline to get everyone selling their Bitcoin and basically FOMOing into Ethereum. And of course, then you do the opposite. Then I'm expecting a big move up from Bitcoin where it then basically starts to outperform Ethereum, much like it did here, right? So you can just, perhaps just take that fractal over and just copy that onto here. But I don't think this move is down. I don't think this move is done yet. This is basically the inverse of Ethereum BTC. 1, 2, some kind of funky 3, some kind of 4, and we're working on that wave 5 now. So something interesting there. I do feel Bitcoin is gonna go to number 2 at some point. It might happen this year, and that'll be the capitulation, I think, for Bitcoin. It's all about the altcoins, though. You have to remain focused on the altcoins now. And obviously, inverse to that is this. If this was any other chart, I would say it looks very, very bullish. You got all kinds of inside candle, breakout potentially here. There's no point assuming a breakout on an inside candle, pattern is going to fail. It only fails if it fails, and then obviously it sets up a move in the opposite direction. We discussed this exact strategies, incredibly lucrative strategy on the masterclass, both mini and the full masterclass. You can have a look. Feedback's obviously very good. Unfortunately, no one can be told what the masterclass is. You have to see it for yourself. But that kind of explosive breakout, that gets you to 0.15. And 0.15, I believe it's 0.17. That is the level where there's going to be a flip. So definitely interesting. And if you're holding the right altcoins, if you understand the trends within this market, definitely there's potential there. So I think there's a lot of dead money in Bitcoin. Most of us just look at the altcoins, and that's basically what you should be doing there. Can I share anything else? I don't want to give too much away because that would be unfair to group members. But definitely some interesting. What's XRP doing? What's this waste of time doing? It's been wasting time for over 5 years here. Once again, there's still dead money there. There's you got a bit of inside candle failure potentially going on there. Still a bit of a waste of time. I think XRP still probably goes lower. There's obviously a descending channel which we know about. So there's still more room to the downside. We're just gravitating around the midline. There's a lot of white space there. There's a lot of space for XRP to go down. Hopefully it gets down to 10, 11 cents, and then that's an A, that's a B, that's a C. Then we're talking. So some interesting things going on here in crypto. I think one of the big lessons to be learned from last year is not focusing too much on the index, and that's what Bitcoin is. Bitcoin is like the S&P 500 for the altcoins. If you're holding altcoins, it's irrelevant, okay? But you got to be very careful here, getting too bearish on Bitcoin. I don't think that's the best idea. Now, let's not give too much away. We'll have a look at energy. So obviously we've called the lows in XOM and Chevron. We said it was going to go to 160 when it was down here. That's documented on the group from 2.5 years ago. I think the commodities run is all but over. Similar kind of thing happened in the 1970s with the oil embargo. It kind of lasted about 3 years, and I think energy is topping out here. To me, it looks like an ending diagonal. So I think there's going to be a lot of documentaries now on ExxonMobil, and usually when they start making movies and documentaries, that's when it's time to offload your position. So definitely there's some subtle rotation going on in tech. To me, this all looks like dead money here pretty soon. It's performed very, very well, especially with the dividend that you were getting on Exxon and on Chevron, but that all looks like a bit of a wedge. So I reckon you could get the 200 here pretty soon, maybe on earnings, but the volume's looking very weak. So I think a lot of retail traders, because they like buying the tops, don't they? So they're probably gonna watch these documentaries on CNBC here pretty soon on ExxonMobil and basically buy the top. So I think ExxonMobil and Chevron, the whole energy trade is pretty much done, and the reason is oil's going to go to 250. So that's what we think. And I've been calling that for years. How long can this divergence with the futures and with the stock go on for? It's already been going on for about a year nearly. So at some point you have to say that the energy stocks are looking a bit too hot to handle up there, I think. So yeah, that's my take on energy. ExxonMobil, also, to me, it looks like a bit of a wedge. I still think it can go a little bit higher, and we've addressed that. Maybe you'll get the 120 here. That all looks a bit wedgy. I never like to see rising price with declining momentum and volume. So what does that really mean? That means they're distributing the asset to retail traders, to weak hands. Because that's not strong money up there, is there? Because they buy down here. They buy the lows. So, yeah, I think energy is pretty much done here pretty soon. Okay, good. Let's just go around the houses here. So Tesla, obviously, we've been bearish since here. That was an obvious head and shoulders. Puts are up 50,000% here from the lows when we called the top. Okay, so anyone holding puts, they've done really well. No good holding puts down here. Still, I think it goes lower. It's trading at around 35 PE. I still think it can get into around, 67, 66, 70, that kind of range. That probably is a good buying opportunity. If it's trading at 35s right now, price over earnings, that would be more like 15, maybe 20, and that's a more reasonable valuation. Short term, that's probably just another flag. That could just be an A, a B, and now it's just doing a 1, 2, 3, 4, 5. So one more push down on Tesla. I think it's probably a good buy down there. This, I don't like this stock, and it's been going sideways for a very, very long time here. There's no return on investment here other than a small dividend for basically a year and a half. The minute this happened, this quite disgusting bear market rally, 100% bearish there, flip bearish. And I've been saying for the longest time, it's going to end up between, you've kind of got my alerts here. It's going to 77. 80 or so. So whilst it's at a $2 trillion valuation, this could easily get to a $1 trillion valuation. So you have to follow the money, right? So, you have to know where to park that money. This doesn't look good. A bit of a head and shoulders going on there too. So, But the problem with focusing too much on Apple is it's much like focusing on the index. It can shake you out of Coinbase buying a generational low, or Facebook. So you've got to be very careful here. You've got to really understand where to invest. I think people who are passive here have made no money last year. I've heard of people down anywhere from 22% to 75%. Most of those are passive. Passive strategies don't work in an aggressive moving market like this. Okay. What can we have a look at here? ARK. Now, obviously, ARK, we call the low in ARK here too, around the turn of the year. ARK has been decimated here, and you can easily read, I think, 5 waves down. If you can't read 5, you can definitely read an ABC down into here. It's taken out the pandemic low, which a lot of stocks haven't, and now it's reclaiming that level. So much like Coinbase, everything underneath this level here of 33.62, that's the spring, that's the shakeout, and that's the trap. Everything underneath here that occurred. So if this level can hold, right, once again, much like Coinbase, has to hold, stop has to be here, that sets up an explosive move in ARK, in all of the ARK stocks. So that's when you got to know which are the ARK stocks. Well, they're all here. Doesn't mean they're all going to move at the same rate. You have to then go into them individually. But ARK is like the ETF. So definitely there's opportunity here in these crappy stocks which no one has really got involved with the last 1.5 years. But like any market, there's only so low something is going to go before the buyers step in. Feb 21. That's a 2-year bear market. So we're bound to get at least a relief rally on ARK. So let's just find out very quickly where the volume is. Let's not do too much of a deep dive into here. Well, straight away, that is the VPOC right there. So we know 37 is a high probability, after which point it'll start moving on and start to fill out some of this profile here. We got profile level here, and obviously there's a low volume node all the way at 54. So that could easily get to 54, right? Assuming that the earnings are good. So this is why I'm saying there's no point being too bearish on something like altcoins and on ARK after it's been going down 90% over 2 years. There's definitely opportunity, and I'm seeing some rotation out of energy and potentially into some of the tech stocks. But you have to know which ones to buy. That's where it's a bit of a value kind of market here, and a stock pickers market. Can we have a look at anything else? Yeah, Nasdaq. To me, Nasdaq still goes lower, much like the S&P. I don't think index funds like Q's, pretty much giving it away there. So to me, that still goes there. It's you're a brave man to be calling a low here. We've got a CPI tomorrow. Maybe the entire market just dumps there. But once again, you have to understand, what does market really mean? Are you talking about the index, or are you talking about the stocks? I would say that's the A. I would say that's the B. And it's a 1-2, and now we're working on that kind of C leg. That is a great opportunity for Nasdaq. Anyone who knows what they're doing, smart money, you're watching this video, let's be honest, you know who you are. They're all waiting down here, so that's a good time to be picking up, I think, TQs or Qs as an index. What's going to drag the Nasdaq down to 884? Well, obviously Tesla and then Apple, and then Microsoft too. Google is valued okay actually, but that doesn't look good on the Nasdaq. I've been around the Nasdaq since 2007, so I know exactly how it moves. That's not a low in the Nasdaq, no way. So once again, probably another down year for the NDX as well. So we are very, very early here in terms of we are very early here. We are literally one trading week, because last week doesn't really count. One trading week into a 50-week year here, 52-week year, give or take the holidays, maybe 40 to 45 trading weeks, if you get what I mean. So we're still very early here. We can easily get a down year here. So I think Nasdaq's a great opportunity. I'm going off the futures. I've got the best read off the futures for some reason, and I'm guesstimating that works out to a Q's price of around 200 basically. That's what my calculation suggests. So NQ of 84 is about a 200 on the Q's, and that's right in the middle off the range. The pre-pandemic high and the pandemic low. So you can't go wrong, I don't think, buying down there. Also, interestingly, there's some previous pivot levels here from the last crash. So that is the time to be buying Qs, I think. I think buying here doesn't really make any sense. So there will definitely be a time for index investing at some point this year, I think. But it's very hard to dollar cost average like that. So hopefully Apple collapses and, that'll bring in the index funds. Then obviously after that, we're just looking at a huge, WXY basically. I mean, suppose you could read all of that as an A or a W. It doesn't really matter what you call it. That's the first leg. Then potentially we could get something like this going on. So, we're going to be here for a while basically. So the market has changed. So everyone needs to understand that and understand what's happened the last 13 years isn't necessarily going to work right now. So index funds being one of them. They're not, they're down 20% on the NASDAQ year on year last year. So something like that. 200, 400, back to 200 again. And then that's the super cycle for it, potentially. Good. That's the NASDAQ. What else can we share here? Nvidia, AMC. So we called the top when it was here. Said it was going to go to 5. That's fairly obvious. That still goes lower, I think. I don't think there's anything to do there. TQs are obviously following. It's going to be a great opportunity here for the TQs soon, but not yet. That looks like 5. That looks like a B. That looks like a bit of a funky WXY. So definitely an opportunity here in tech soon, but not yet. You've got to shave off at least 70 points off the Qs there. What else can we share? Lyft, Ethereum, Amazon, right? So we can get off that. Quickly go on the dollar. So obviously pound, we call the low once again. Advantage of being in the group. That was the most obvious trade in human history. That is a lifetime low. No one's going to live long enough to see a new low in the pound. This is going straight to 150 this. So, we said it when it was down here. That pound is going basically to repair all of this. So pound is going all the way back to 150. It might take a while to get up there, but I expect the pound to be one of the best performing G10 currencies moving forward from this low. And so far, that's been proved right. I think it gets to 150. I think that's fairly nailed on. It'll take some time to get up there. Might not necessarily get up there this year, but the way the dollar looks, there's a potential that it might do. Dollar doesn't look good at all. I think it bounces here pretty soon, though. So, not to contradict, there is a low volume node at 100 here. So, I think this is like a first leg. Then something like that, then something like that. Quite possibly, that was such a good FX exchange rate that for anyone holding US dollars. That is a 20-year high up there. We call that in the group. How can you not, take advantage of that? That's really a job here with the market, is to take advantage of inefficient pricing. That was inefficiently priced, a 115 handle on the dollar index. I mean, if it's now correcting everything since 2008, as we've said, it could go down to 90. So this is what I'm saying. This is why there's so many contradictions within this market. Dollars falling, Bitcoin's falling. What do? Well, if you never invest or never trade, you're going to end up missing the move. Solgado and Coinbase are up, 150% respectively since just a few weeks ago. So, got to be very careful here. But yeah, dollar doesn't look good though. This high, I think it's going to be a long time before this high gets taken out. Years. So very much. Potentially a decade. I don't see the situation whereby this can make a new high. I don't think. Now, finally, we're going to cover some interest rates here. Which is here. So this is the inflation rate, which we're tracking very closely. This is the interim peak, obviously. That's the first peak, second peak. So the CPI is going to get released tomorrow, I believe. I still think at some point this year, there'll be another spike coming. And this can basically get above 10, and that's when peak inflation hits, and that's when we go down. So this move here, potentially, could cause the next move down in the S&P, could cause that capitulation moment to around 2300, maybe even lower. There are some very, very bearish counts for the S&P, but that move in the inflation rate, I think, back up to 10%. Technically, my target is between 12 and 14%, and I calculated that here based on what was going on here. So I don't think inflation, under any circumstances, has peaked here at 8 point whatever it was, 8 point, 9 point something, whatever this high was. What was the high? Yeah, 9.10. Under no circumstances do I think that it's peaked for the entire cycle. I think there's another big surge in inflation, 12 to 14%, and that's when we've peaked. Then we've got our first peak, second peak, third peak, and then that could be linked to an S&P low. So that remains to be seen. So yeah, that's it really. That's all I have for today. So if you guys want to join the group, have a look. There's some very interesting moves going on in a certain sector of the altcoins, and I've got some very bullish targets on some of those coins. If you want to take a look, then you know what to do, and the masterclass is there too. I'll catch you guys later.